This is how I've been doing my analysis for the past couple of weeks. And it plays into all my mindset stuff as well. So I firmly believe that once you've reached a certain level of development as a trader, which is kind of not a beginner, but definitely not profitable enough to do this full time, you need more time. You need like another year under the belt, at least something like that. And you're kind of stuck. You're warbling around. You're stuck between slightly in the red profit factor or like a mediocre profit factor that you can't really trust. You don't feel super confident about it. Usually it's somewhere between 1 and 2 or like 0.8 and 2 profit factor, somewhere around in there. And your win rate's like maybe 5% lower than you want it to be. Like it's like a 65 or a 70 or something like that. I firmly believe that if you're at that level, you can spot the setups good. Like you look at a chart, you look at a ADHR chart, and you don't need to go, okay, does it have this? Does it have that? You're not looking at a piece of paper. You just look at it and go, that's good. You're looking at the market and you go, okay, well, this is a bear trend day. Cool. Like you're pretty on point with all the setups. Like you know the strategy, you know the setups, you know what a good trade looks like. And now you're just losing your mind saying shoulda, coulda, woulda every single day. How do you get through that? Well, you need to look at the way that you're trading completely differently. At this stage, if you are chasing your P&L, your profit factor, or your win rate, I firmly believe that if you're at this stage and you're doing that, then you're not focusing on what's important. You're really just kind of messing up your mindset. And I believe you need to do this type of analysis, a qualitative analysis instead of a quantitative analysis. There is a big mistake that people make. They'll take a look at a day or they'll take a look at a week of trades and go, well, you know what? If only I held a little bit longer, it'd be good. The walkaway analysis is really good for that. But the issue with the walkaway analysis is it doesn't allow you to kind of switch gears a little bit, take quick scalps, hold for a long amount of time. And you're wondering, well, how the heck do I get into that zone? You need to become a really good contextual decision maker. And you need to make sure that your emotions and the things that you feel are lining up with the way you should act. So everything that you do should be to develop that. Really good quality decisions and making sure you feel the right feelings when things happen. And we're doing a lot of things that completely mess that up. So here's what you do. You take a look at each trade on your broker platform. You don't know your P&L. You don't know how much it won. You don't know the quantitative aspect of it. You just know the decisions that you made. Here's an example. I took MO short here, and then I made a mess up here. I did, instead of a stop at break even, which I wanted to do, I made it a limit. So it immediately exited the trade for a little profit. I wanted to stay in until here. Now that messed me up mentally, where I was like, damn, I did it again. I made an idiot move. But now I know, okay, just get back in right away and take it to the profit target, because otherwise, why would you have had that target to begin with? Cool, so I did that, and then I just took the profit target because I was already so mentally messed up that I wasn't really looking at how it was getting there and how much it was just slowly grinding down on a bear trend day, and I could have held that damn thing until something broke over this ADMA. Okay, so here was the mistake. A technical error, cool, that happens. But my emotional context was frazzled, and then I couldn't trade it correctly. That was the poor decision right there. Poor emotional context. I didn't breathe, walk away from it, and then get back in. Here's an example of another trade that was a bad trade. Took PayPal long, and even though it was a strong trade last week, a strong bullish chart, Harry took it as well. I held on to it, and then I started kind of maybe second guessing myself and regretting it because it was a trade that I took that a pro took instead of one that I found on my own. So now I'm holding this thing overnight, and I'm thinking, oh, I don't want to be in this trade anymore. I regret this choice. So I put a stop at break even on the 17th, and I got out before the market opened at break even. That was a bad idea because even though you might be thinking, oh, no big impact on the P&L, no harm, no foul. I mean, it went into profits a little bit, but not really a big win at all. This would have been a fraction of a normal win. The issue here is now that I'd made a move here that told me that you can't trust your positions. You can't trust the positions that you take, and you have no conviction in it. So now I don't have any belief in myself to hold things that are actually going to win. It would have been better if I just took the loss on this thing than scratching out, or at least let it go into a winner and then put like a stop break even or something like that. It's better sometimes to take a loss to preserve your mindset than it is to take a shitty win. Here's another example of a loss. NFE was another loss right here. I took NFE, and it was a nice bearish chart, great relative volume, all that stuff. but I didn't vet the chart. You see, the day before was a bear trend day that I didn't think I made enough on. I didn't think I held long enough. I didn't think I added long enough. And I felt like I was deserving of more profits. So I was going to make it happen today. Basically, this is tilt. This is revenge tilt. So I'm getting all this FOMO, entering all these shorts, attacking these positions as soon as I see any bearish action on SPY. And I've got FOMO, I've got anger tilt, I've got all sorts of poor emotions right now getting into this thing. And even though it's a decent setup, I forget an algo line. NFE has an algo line, or at least some kind of support line or something. And it has it right through here, but more importantly, there's another one kind of coming up through here somewhere, like way back, yeah, way back through there. It's coming up all the way through there. I didn't see that line. Okay, so that was a bad decision, but it was a good decision to immediately take the loss as soon as I noticed it, even though it went back for a scratch. Now, if I was just analyzing this thing with the walk away and seeing where it ended up and going, oh, this thing would have won, I should have stayed in it, I would have destroyed my ability to make good decisions as a trader, because that would tell you that, like, oh, you can kind of gamble on a position. You can hold it and it sometimes wins, and that's okay. And that is bad for the long run. It's much better to go, I know that I'm going to take a loss when I decide to take a loss, and I can trust that. This was a good decision, this loss, even though entering was a bad decision. So these are examples of qualitative, contextual decision-making analysis that you can do on your trades once you're kind of at that intermediate level. And this is how I do it. I go through each trade and I take a look at what decision issue was, especially on the wins. Every single trade typically will have some kind of poor decision that you made or some kind of issue. Once in a while, there's a good one where you're like, yeah, you nailed it. This was great. But if you're an intermediate and you don't have just nonstop decision-making, poor decision issues that are irrespective of the outcome of the trade, but just poor decisions, then why are you an intermediate still? Why are you not a pro? Okay, so give this a shot. See if this works out for you. This has helped my mindset a lot, and this is helping me develop as a trader much faster now that I'm at this stage.